Good day, everybody. I'd like to welcome you all to our first episode of Strictly Technicals, as aforementioned, that is hosted by me, Koketso D. Tlhakanyane, the founder and CEO of Ace Forex Academy. In this week's episode, or let me rather say this week's forecast, what we will start by looking at is our major pairs. And to minimize some noise that we see from smaller time frames, we will only be utilizing the daily time frame. So not to waste any more of your time, because we like to keep analysis short and simple, let us start with our first chart, which is the euro against the United States dollar. We've had quite an interesting week coming from the NFP results that were released. Let's just have a look at what the market is indicating to us. Now, what we teach at our academy is to first mark out your two most recent points of support and resistance. So if you can check here, this is our first point of confirmed resistance. Let's just unfold that and use the dotted line. There we go. That's our first point of resistance and our first point of confirmed support. Right. And let's mark that out. Now, what we can notice is that price has been ranging between these two areas of importance. Now, let's just follow price and just get a clear understanding of where price actually comes from and what it's indicating to us. So it came over here, formed our support, pushed up and formed our resistance. It came back down and bounced off our support, and now it's giving a push towards the top. There we go. It's giving a push towards our resistance. Now, what I teach is trading once you have been given a scenario that then impacts your response to the market, right? So I don't just join anything that I find. Like, this is an uptrend and it's clear that we have a possible push to our first TP over here, right there, our first TP to our level of resistance, right? So what I would then be looking out for this coming week is that in this region over here, let's make that medium blue. That's fine. So in this coming week, what I'd be looking out for here is a possible fake out, or I'll be looking at a possible breakout. And this is what I love about the markets. I love the fact that you are always given more than one scenario to anticipate, especially when you're using your support and resistance levels. So just to key in what I mean, let's use our line tools, right? And I'll use a different color for this. So what I mean by a fake out is that I'm expecting price to push through our zone. Use a different color. I'm expecting price to push through our zone, trap some buyers in there, and then push back into our zone and push towards our support region, right? This is option A, possibility A. And possibility B is that I can then wait for price to break out of our zone. Use another different color. Let's use the dark olive green, right? So I'll wait for price to break out of our zone, pull back towards our resistance, now turned support, and then push up again, right? These are the two possibilities that I'm looking at for this coming week. So for this coming week, with regards to the euro against the USD, is that we are expecting a push towards the upside. Now remember that nothing is guaranteed in the market, right? But it's better for us to just expect or anticipate the move so that we are prepared should it happen, right? So what we're expecting for this week is a push towards the upside, which is the completion of our bounce from our support level at 1.1302, and we're expecting a push right up to TP, where our resistance level is at 1.15406. But now, once TP is reached, we can then be alerted to a possible fake out, which is our orange, or a possible breakout. And that, ladies and gentlemen, is my forecast for this coming week on the euro against the United States dollar. Now, as I've pointed out, this was very short and very simple, and it's always advised to keep your analysis very simple. Minimize the noise so that you can have a clearer picture and you can have precise signals. Right, let's move on to our next pair, which is the pound against the United States dollar. Now, just like the previous currency pair, what we're then going to do is mark out our latest level of resistance, which is over here, and let's mark out our latest level of support. We have quite a big support zone over here, and that's because I'm incorporating this big candle over here as it encounters for our area of support. Remember that support and resistance aren't just lines, but they're rather areas, right? So let's just have a general following of where price was coming from. So it dropped right down to there. Let's use the magenta. It dropped right down from there, and then price pushed up to give us our level of resistance. Remember, I'm minimizing the noise on my chart, so I'm just looking at our major points of interest, which is where our price bounced off, and price then pushed down towards our support over here. Now from the support, what do we then have, or what can we then forecast for this coming week? Is that we see that we have our first top over there, and we have our bottom over here. And from this bounce, remember, price moves from support to resistance. We can anticipate move towards the upside, and we can wait for our GU pair to give us our first prediction of the coming week, which is a bounce of our resistance level, and it might come back down to our support zone over here. Or option 2, remember that markets are full of what? Options. So you've always got to have more than one speculation so that you are prepared for whichever one comes first, as we are not guaranteed that the market will always play out the way that we speculated. So we have our area of resistance here. Our option 2 or second plan of action is to wait for a breakout. Okay, wait for a breakout of our resistance level, and then immediately after we have our breakout, such a nice color. Yes, let's use the color. So wait for a breakout, and then we have what we call our bounce of our resistance now turned support. There we go. So we have two options in front of us. Number one, we can anticipate price to turn around right inside our zone here, our resistance zone, which will then give us our double top. You see that? We have our first top and we'll have our second top, and we can TP right here at the neckline of our double top once it has formed. Or we can wait for price to break out and then bounce off our resistance now turned support in the case of having a breakout, and we can wait for further push up. So my bias for this week of the pound against the United States dollar is that I'm still looking for an opportunity towards the upside as price has bounced off my support level of 1.2479, and it's making its way up to 1.32579, and that's where I can anticipate another take profit and then wait for one of my plans of action to kick in, which is either a breakout over here, which is either a breakout or a bounce of resistance. A bounce of resistance to then give us our double top. And that's basically it for my forecast of the pound against the United States dollar. We can move on to our next pair, which is the United States dollar against the Japanese yen. And what we see over here is very, very interesting. Now, just like we have done with our previous pairs, let's mark out our latest points of resistance, which is that one thin line over there, and our most recent support, which is this area right over here. Now what we see here is very, very interesting. Let me just mark out the support and mark out my area of resistance. Now let's just follow where price is, just to get a clear direction of where price might go. And I say might because no matter how hard you can analyze, it's not all the time that markets will move in your direction, as nobody is 100% certain of the movements of the market. So from forming our point of resistance over here, price then came, it gave us a breakout. There we go, as we can clearly see it here. We have a breakout of our area of support. Now what we see as developing over here is that we have again two options that we can consider for this approach, right? Number one, that price is going to come, push up towards our area of support now turned resistance. Let's make that orange, right? Price will push up to there, and then price will bounce back down towards our spike over here, the end of our spike. Let's make that dotted. So for option A, we have a bounce, right? And for option B, we then have what we call a fake out. So price will then close back above, our support now turned resistance, and it will become a support again, and we can then wait for a pullback back to our support zone and a bounce back to the top. That's what I see for our plan A and our plan B for the United States dollar against the Japanese yen for this upcoming week, which is very interesting because with our previous pairs we had signs of declining strength in the dollar, but now with this one we have a possibility of an increase in the strength of the United States dollar, and that's if though we have a breakout over here, we have a fake out and price closes back above our support and resistance, or we can have this, then our bounce. Our bounce of our support now turned resistance. So these are the two options that I'm considering for the United States dollar against the Japanese yen for this upcoming week. Very short, very simple, and very sweet. That's how I like to keep my analysis, because you don't want to overcomplicate things and suffer from what we call analysis paralysis. Yeah, so we can now move on to our second last pair of this episode of Strictly Technicals. Now, just a reminder to everybody that this is not a signals service. However, it's just a technical analysis sharing a platform that I'm using to share my views of the markets for this upcoming week. If you're enjoying the video, please do drop a like, drop a comment about any other pair that you'd like to see next week in our next episode. Any other pair that you'd like to have analysis on, drop a comment of what you like, what you don't like, and please do subscribe to the channel, as your subscription will be appreciated. We are aiming for 100 likes for our first few months, so please help us reach that goal. Now, to further carry on with our episode, let us just look at the United States dollar against the Swiss franc, and what we see over here is that we're going to start out like we've been doing. Mark out your latest area of resistance, which is over there, and then mark out your latest area of support. Try and have a brief understanding of where price has been coming from. So it gave us our area of support, then it gave us our area of resistance. Now, some of you may question, like, what do I then do in the cases where the charts are so empty? Well, I will then extend my forecasting to looking at least the third point of interest, or make it, yeah, the third point of interest, where I then had my area of support here. And let's forecast and see where price currently is. Right, now there we go, much better. So after giving us our resistance level over here, price then came down and broke through our previous support level, right, which is the support level of 0.98057, which was forecasted from this bounce of support here on the 7th of June last year. So price then came and broke through our level over here. So this is pretty wonderful. It gives us a nice perspective to focus with, because what we have is pretty interesting. And this is what we call, let me just use another color. what we have is pretty interesting, and this is what we call our fake out trade, right? So what happened? Price broke through our level of support, but instead of maintaining it as a level of resistance, what happened is that they closed back on top of our level of support, and this is what I then call the fake out trade. So this is what I'm referring to every time I say fake out at our level of support or resistance. And with regards to forecasting my take profits and my stop losses, what I like to follow is a risk reward ratio starting at 1:1 and forecasting as far as 1:2. What I believe is that you have to make what you can make from the markets. Don't be too greedy. I rather have a string or a continuous hit of 1:1 risk reward ratio hits rather than waiting for 1:10 trade that has a lower probability of working out. So taking a 1:1 risk reward ratio has a higher probability of working out more than a 1:10 risk reward ratio. So that helps me control greed in the markets. And I only do that because I need to make my money. The main aim of the game is to make some money. So if I can at least have a higher probability of making money, then why not? I mean, everybody has different risk tolerances when it comes to the market, and that's how far I'm willing to take my risks. So just to forecast what I mean, so we had a candle, this bearish candle close below our support, and then we had a bullish candle close above our support again. So I'm forecasting from my bullish candle right down to my spike, the end of my spike, and then this then gives me a good fake out. So if you notice what I'm saying, you'll see that upon entering the fake out, let's just color this in. I'm loving this analysis. Upon entering the fake out, I would have already made my profit over here at TP2, which is my 1:1 risk reward ratio. And this is where my stop loss would have been with a sell stop and a TP over there, just to correct it if I was wrong. Remember that you can't always rely on one outcome of the market. You have to be open to many options. And because you open to many options, you are then able to better manage the results that come from your strategy. Hence, I have my stop loss and correction trade over here and the TP of the correction trade. Right. Never mind that. So from there, price bounced up and it came and it hit my TP over here. So I would have been a happy chappy over here out at a risk reward ratio of 1:1, and I would have made my money. I lost nothing, but I made something at the end of the day, and that's all that matters. But the hardest thing to do in the market is to walk away profitably, because it's guaranteed that 90% of traders don't do that. But this trade would have then been profitable to me, and that's around approximately 1,250 points, which translates to 125 pips. Pretty healthy uh, 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 amount of pips to make some profit. So what we then have here is that TP is hit, but what we can forecast is as far as TP3, which is over here, which is our 1:2 risk reward ratio. Remember, 1:2 risk reward ratio, that's as far as I'm willing to go. When they say that I'm really holding on for dear life onto this trade. So I would only go as far as 1:2. Like I have explained, the higher you push your risk reward ratio, the lower the probability of it being attained. So I rather make my money where I can make my money instead of being greedy with the markets. So as you can see, from our fake out, we had a push to TP2, made our money and got out, but you can still hold up to the price point of 1.00941, and that will give you a TP3, which is a 1:2 risk reward ratio. And once price reaches there, then we will wait for another bounce or possible fake out. Whichever one comes first, we are ready for it. Remember, always have a plan A and always have a plan B. And that's my forecast for the United States dollar against the Swiss franc. Now, moving on to our last chart for this episode of Strictly Technicals, what we then have is the United States dollar against the Canadian dollar. This is very wonderful as well. Let's have a look at this. Mark out your latest area of resistance, which is over there. Just correct that. And we mark out our latest area of support, which is over there. Right. Let's just have a general outlook of where price move. Try and follow price as much as you can. Remember, I'm only considering price pushes to my important zones, right? So I'm minimizing the noise that I'm seeing. Have a big gap between our support and resistance. Remember my rule, move back one more zone, and as we can see, we have a zone over there. And what do we see? We see a similar pattern to as the United States dollar against the Swiss franc, right? We had a bounce over here. Let me just use my tools. We had a bounce from there. So price came from up here, from our resistance, came and hit our, this was resistance and it was turned to support. However, what happened is they didn't push up to our resistance level. They broke through it. So what am I anticipating for this coming week on this currency pair is that I'm anticipating another fake out trade, right? And depending on the close of my bullish candle that will close above my support and resistance, I will then forecast my 1:1 risk reward ratio, or as far as I can go, my 1:2 risk reward ratio. So option A is that we are going to have a fake out and we can push for 1:2 risk reward ratio, or option B is that we can have a continued push towards the bottom and price could push to our old support zone, which is at 1.28099. So this is what I'm forecasting for this pair. It's a possible fake out or a continued push of the breakout towards our area of support. So when the markets open, what you can then wait for is a possible push back into our zone, going for a sell and write it down for our continued movement of the breakout towards the downside, or you can wait for a close back over our support and resistance and write it out with a fake out as far as a 1:2 risk reward ratio. And that's it for my analysis of the United States dollar against the Canadian dollar for this week. Like I said, I like to keep my analysis short and simple and keep distractions away from it as much as I can, removing unnecessary indicators and everything towards those sorts. So you always have a better picture of price when you can see through the noise. Once again, ladies and gentlemen, that will be it for my analysis this week, and thank you so much for watching our first episode of Strictly Technicals, hosted by me, Koketso Dikakanyani, founder and CEO of Forex Academy. Just a reminder once more, please do like our channel, drop in a comment about any other currency pairs that you'd like to see, and please do hit that subscribe button as we are trying to push for our first 100 subscribers. Thank you very much.